Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a short trade off of a couple different things. We have the range highs in play. We have the top of a channel that is coming into play very well. And we also have the big 11,900 level from last night's newsletter. Now, all of these levels kind of stacking up at the exact same place. I'm looking to sell off of this move at least down to the range lows because that's likely where we're going to find buyers coming back in again. Keep in mind, we do have FOMC news later today, and a lot of times with that, we end up with a slow, choppy market that just kind of goes both ways and really just sort of has a hard time getting anything going, and we're definitely seeing that movement. Now, you'll notice a couple levels on the chart, 11,650 as well as 11,900. Those are the levels that we talked about last night in the newsletter. If we pop this open, the Euro's objective was at 11,900. That was the initial objective. That was really, really close to finishing. That was the measured move. And then we had the double down target down here at 11,650. Now, that 11,650 level, we hit that in the overnight session at around 1 in the morning. And look at the amount of support that came off that level. It's ridiculous how much support came there. So with such massive support, now we have a level of interest that if we do come back to that area, we could find a lot of support to buy once again. Now, unfortunately, I'm not awake at 1 in the morning to trade that kind of thing, but if you are trading the Euro session, that was a beautiful bounce off that level. Now, in terms of coming back up, we came back up to that 11,900 area, and it's been acting just as strong as resistance as we saw yesterday. We finished that move off actually late in the afternoon yesterday, and ever since then, that level at 11,900 has been a massive area of support and resistance. And now we've come back up to it in the morning session for the US at least, and we formed a range around it, a fairly obvious range that's forming inside here. So with that range stacked up right on top of that level, knowing that we have a lot of downside bias, mainly because we just faded off the highs, major objectives now will be back down to these lows again. And we also have bear falling resistance in the form of a channel. That's a lot of red flags, right? We're looking for the market to want to fall a little bit lower. Now, the entry point underneath this most recent bear candle, our entry is at 11,890, and the target is going to be down where we found buyers come in before, right? Now, the reason I like it here is for a couple different reasons, right? If we zoom in a little bit, we can see that we had a lot of wick failure down there. They did finish it off and form kind of a V bottom. But if we look backward a little bit, that's also where the market stalled. We had kind of a ceiling that got put in there. And when we came back to it, we found a huge amount of support. That's a level that I need to keep an eye on. So I'm looking for the market to fall back in and around that area. It may go a little bit further. It may go down to the channel lows. It may just come down to these prior lows and find support there. But the fact that all of those levels of support came in at 11,830, that's something that we need to be paying attention to. So looking for the market to want to push down into that area and begin forming potentially just a wider range from the highs up here down to somewhere around here. Likely, if they are going to form a range, it's going to be using those lows. But for now, with all of those tests at that level, it wouldn't be a surprise to see them put it in around that area. So that's kind of what we're looking for. We're short from 11,890. I'm not anticipating this going fast by any means with FOMC day around the corner. So we'll give it a little bit of time here, see if the sellers can push down into our objectives at 11,830. Sellers pushing down nice and aggressive towards the lows here. Objectives not too far away. Let's reduce some of this risk. We formed a little micro double bottom down here, and that's the one that's breaking out right now. Now we're coming into our objective area. We can see they're only one tick away, so all of the the risk has been taken off the table. We just need to see them finish the job. We tested the target, no fill yet, so we're just waiting for a little bit more from the sellers, but just a beautiful example of using this information to our advantage. We have a range overall in the day. We have falling resistance, and we're holding a major level of support and resistance as well, pretty much all morning. There's a really good chance that we fall back down and try to finish off that range at the bottom. So now we just have to see the sellers finish it. We've tested the objective, reduced all of the risk. We've done everything we can now. Now we just have to wait for the sellers to finish the job and take care of that objective at 11,830, and then we can call it. So we'll give them a little bit more time here, see if they can give us our fill at 11,830, and then we will wrap it up. There we go. We get that test of the lows. Beautiful little tap again, and we got filled that time around. Beautiful move down, and that's going to do it for this one. So if you have any questions about it, feel free to send an email into School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.